WP Carey Stock, ticker symbol WPC. This stock is down almost 9% on the year-to-date chart, underperforming the S&P 500 big time. On the 30th of April, WP Carey presented earnings with a beat on FFO, but a miss on revenue. But most people love WP Carey stock because of the dividends, and I understand why with dividend yield at 6.4%. In here we see the total returns in the past 5 years including dividends. WPC stock returned barely 1%, while the S&P 500 is at 100%. And this is including dividends. A significant difference if you ask me. And with the stock coming down lately and earnings released, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does WPC do? WP Carey is a real estate investment trust, principally involved in the ownership of properties located in the US, Western Europe and Northern Europe. In total, WPC has more than 1,200 properties in their portfolio and 335 tenants. North America represents 63% of the ABR and Europe represents 37%. The average lease term is at 12.2 years, which is looking pretty decent. The top 10 tenants represent almost 20% of the total ABR, and to me this looks really good. Occupancy rate is at 99%, also looking really good. Industrial and warehouse represent 63% of the portfolio, also looking really good. WPC used to focus on office space, but they are shifting to industrial properties. Looking at the tenant diversification, retail stores represents 24% of the ABR, beverages and food 9%. And to be honest, this 24% is a bit too high in my opinion. I would prefer a maximum of 10% here. A really important number for this REIT is the same store ABR growth. We see that it is growing in the long run, but ever since the start of 2023 it is coming down a bit. Looking at the recent earnings report, we see that revenue is down both year over year and quarter over quarter. To me this doesn't look any good. Net income is down year over year, but quarter over quarter it is increasing again, which is something that I really like. Looking at the AFFO, one of the most important numbers here, we see that it is again down year over year and quarter over quarter. Dividends are declared at $0.86, showing that the dividends are safe with AFFO at $1.14, so that's the positive part here. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. WP Carey is a 13 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at nearly 12, indicating they might be undervalued. Later in this video I will show you my 3 price targets for WP Carey stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 1.7 billion and in this graph we see that revenue went up in the long run. To me this looks really good, and for a REIT this doesn't look too bad either. We see that margins are going up in the long run. This is also looking really good to me. EPS is going up in the long run. It's not always steady and consistent, but that's very common for REITs. Analysis expected in 2024 EPS will decrease big time, which is really sad to see. but in 2025 it is expected to see a 10% increase again. For the revenue, it is looking pretty interesting with minus 4% growth expectations in 2024, but in 2025 it is expected to see a 6% growth again. Return on assets is sitting at 3.2%, which is a low number, even for a REIT. Return on equity is looking really decent, and the most important number, return on invested capital, is sitting at 3.3%, which is again a low number. But it is slightly higher versus the 5-year average, so that's the silver lining here. Current ratio is at 0.62, which is a decent number. Nothing really special to mention here. Right now WPC has 7.9 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. WPC has 777 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 6.4%, which is a great number. Annual payout is at $3.82 and payout ratio is at 80%, which is a little above the 75% average for REITs. There are no growth streaks since they cut the dividend. And in here we see the dividends paid since 2012. They increased the dividends at a low rate. However, in the long run this really adds up. But ever since 2019 they slowed down big time in increasing the dividends, up to a point where in 2023 they cut the dividends a little. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to go down from here. And overall these dividends look really interesting to me, but how about the historical returns? I decided to compare WP Carey stock with the overall market, in this case the S&P 500. Next to that I added EPRT and ESRT. On the 5-year chart we see that WPC had a 1% return. And keep in mind this is including dividends. And straight off the bat this is really bad. The S&P 500 however is sitting at 100% return, beating everyone in this list. On the 1-year chart it looks pretty interesting, with the S&P 500 beating WPC, but ESRT had the highest return here with almost 70%. On the 6-month chart it is again WPC with the lowest return here, while the S&P 500 is beating them big time. This time EPRT had the highest return. On the 1-month chart it is finally WPC beating everyone in this list with a 12% return, while the S&P 500 is only seeing a 6% return. So bottom line, WPC underperformed the S&P 500 long term, but short term they're getting some momentum. So could this be the perfect time to buy WPC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 30, 32 and 36%. And for the free cash flow margin I'm putting in 60, 65 and 70%. For the PE ratio I'm putting in 20, and for the price to free cash flow I'm putting in 7, 9 and 11. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now, WPC stock is around $60. I hit analyze, and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $42.8. We have a mid price target of $57.6, and we have a high price target of almost $77. And to me, the mid price target is the most justified here, indicating that this stock is overvalued right now. Which price target do you think is the most justified here? Let me know in the comments down below. My final conclusion on WPC is that it is an interesting company that drastically changed its business. It has been a while now since they did that, but to me it looks like they are not there yet. Looking at the fundamentals, I think everything looks pretty good. There is nothing that really worries me a lot here. Looking at the dividends, I also do get really excited. The yield is pretty high, but there is a big problem. The growth isn't really there. And cutting the dividends is never a good sign to me, so definitely keep an eye on these numbers. Looking at the valuation, I think it's around their fair valuation right now, meaning the business needs to improve or the stock price should fall a little bit before getting really interesting. And as of right now, I do think there are better REITs out there that could be bought. So for now I'm skipping this stock, but I will keep analyzing them from time to time. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.